Hi. Is the Fed going to raise interest rates? Are there new loan limits in our county? I'm April Hugh.
Is buyer activity up or down? Tune in and we'll find out today. Good morning, I'm Miko.
We have Patrick Chandler and Nathan Hugh with Loan Depot with us today.
Welcome.
Good morning.
Guys.
Hi.
All right, so can you explain our new loan limits?
Well, the new loan limits in Santa Barbara County for conforming loans will be $783,150 on a single family home.
What was it before?
It was 620.
Actually, it was 680.
Oh, 680.
82,000.
Yeah.
Yeah.
So they upped it. They pretty much raised the loan limits throughout the state, or I mean, pretty much in every county. Did they go up a little bit?
They did, and to explain what the loan limit is, specifically, it's the median price of the homes in the county.
I see.
And it's for what we call Fannie Mae, Freddie Mac loans. These are the loans that are guaranteed by Fannie Mae and Freddie Mac to investors, and make them very valuable. And in these type of loans, they keep qualifications being able to qualify is a whole lot easier. And also, when they guarantee these to the investors, they make them a lot more liquid. So Fannie Mae, Freddie Mac's important. That's 782. When you go beyond that, we go into what's called jumbo loans. Those are harder to qualify, and sometimes the interest rate's a little bit higher on those. But that's the key to that price.
Oh, okay.
So then they just see the prices going up everywhere and then they just arbitrarily go in and adjust the
Once a year.
once a year?
Okay,
It's
so
once a year. Okay, I was
year.
wondering.
Okay.
Okay.
So-
So it could go down
Yeah, I was
if the
just
price, right?
Medium.
Okay, got it.
Okay, interesting. So it's the median price home in the county.
Correct.
Okay, so for example, Santa Barbara versus Santa Maria, I mean, we have two different markets here.
So they lump
So
it
they
all
lump it all
together.
together and they
Average it out.
Okay, so I guess it kind of helps us a little bit just because it increases the loan limit for
Absolutely.
our,
But it
our
doesn't-
area, but down
Doesn't
there
help
it
them.
just
Yeah, I would say probably 80% of the loans in Santa Maria should fit in within that 782.
so that's good. Yeah,
Wow,
that's great.
that's great.
Yeah.
So now, go ahead.
Oh yeah.
And the statewide limit is 647,200. So that's the statewide limit. And then there's another maximum loan limit to be concerned about is the FHA limit. So in other counties, they can have a lower FHA limit than the conventional loan limit. So if you're looking at places like MODOC, the maximum you can go on an FHA loan for a single family home would be 420, 680.
And what's a conventional for MODOC?
647, 200, that's the statewide limit.
Oh, I see what you say. So everybody can, throughout the state, the minimum is 642, but the FHA could be lower than that depending on the county it's in.
But in our county, in Santa Barbara County, it is 782.
It's the 783, 150.
FHA is also? Oh, okay, so
Wow.
that's amazing.
Wow, that's crazy. Okay.
You get into a house that costs 700, well, a loan was 782 with 3.5% down.
Now, what about VA? Do you handle that, or is that, and what would that?
VA's is yes, I believe it's 782 that VA will guarantee with a 25% guarantee is what they do. Technically, you can do a larger loan on a VA, but anything above 782 requires a 25% down payment.
Oh,
That
interesting.
it used to be
Oh.
417 like 10 years
So
ago
you
or
put-
something.
Like on a $1.2 million house, you'd have to put about $100,000 down
For VA.
for VA.
Because 500,000 would need 25% of that down in order to get the VA for the whole thing.
Got it. Interesting.
Yeah, well, that's really, it's amazing with these prices and the loan limits and now interest rates right now, what are they kind of?
They've been tracking upward. The Fed has announced that they're going to raise the overnight rate by 0.75%. Now, the overnight rate and mortgage rates are not directly tied together, but they tend to move in conjunction with each other. The most important thing about mortgage rates is what is the Fed doing with mortgage-backed securities? And are they continuing to buy mortgage-backed securities, increasing the amount of money available for loans? So long as they are doing that, rates will stay low. The Fed has announced that they are going to start tapering that purchase of mortgage-backed securities, decreasing the money supply, increasing rates. So that's the thing that we look at very closely.
And they're saying 3 to 4 times this year that they're planning to do this? Or is that?
What I've been reading, and this changes, it seems like, is at least 2.
Okay.
But that 2 could, generally when they do increase the rates, it's a quarter point. But they could do a half a point very easily. Okay, so the idea is maybe through close to the end of the year that they're really concerned about inflation. And this is one way you got to decrease the money supply. You got to
Curb the inflation.
Inflation.
Yep.
put less money into the economy. One way of doing that is increase the cost of borrowing, and that's what they're doing. And to what we're talking about is when they're buying, the government is buying mortgage-backed securities. They're buying the Fannie Mae, Freddie Mac up to $782,000, and when they start decreasing on that, it's less. That's going to raise interest rates because we're going to have to find other buyers for that.
So now so I was told years ago that every 1/4% of a hike eliminates so many buyers. I mean, what are we looking for, like a monthly payment difference?
Yeah, so let's say, what's the current rate right now? 3, and
I would say 3. No, it's higher than
3.5?
that. It's
Okay.
pushing 3.5, maybe 3 5/8.
okay, so let's round it off. Let's say it's 3.5 right now in a $600,000 house, and potentially by the end of the year, we're looking at 4.5. So that's another,
Maybe higher.
okay.
If they do
Okay.
half a hike.
So then what are we looking at for a,
Qualifying, I can't give you specifics on here, but every time you do raise it, like say a quarter point or so, you're probably eliminating maybe about 5% in 5% of the population qualifying by raising it by that much. Yeah. So it makes it tougher, and Fannie Mae, Freddie Mac, FHA have not changed their underwriting guidelines in a long time where they can accommodate. Sometimes what they'll do is says, okay, rates are going up, we'll make it a little bit easier by allowing a higher debt ratio or something. Like they have not done that.
not done that.
On a positive note,
Okay. We got positive.
higher this year. A lot of people received substantial increases, and across the board, wages have gone up. So we are seeing qualified buyers who are earning more, therefore they're able to afford more. And one of the things that we have to look at is, as they are increasing their income, the increase in the housing prices and their monthly payment is not increasing as much as their incomes have gone up. So some buyers actually have more liquid money to pay their home prices. So that's also helping home prices go up.
Okay.
So over the past few years, I can't tell you how many people have told me, I'm just going to wait and save the money for my down payment. But my approach to, or my comment to them was, you'll never be able to save enough for the appreciation that's happening.
Well,
But-
just recently, for sure.
For sure, right?
Yeah.
But is there ever a time that's a wise idea to wait and try to save more money?
Well, and we were talking about this earlier, is there's a misconception out there with a lot of potential home buyers that you have to put 20% down on a property. That is just not the case. There are many loans out there, Fannie Mae, Freddie Mac, FHA, even VA, which is 0 down payment, that you can get, like as Nathan was saying earlier, 3.5% down payment. On the Fannie Mae, Freddie Mac, you can get with 3% programs through the Home Ready. There's Cal FHA, which you can come in with 3%, and in a lot of ways almost come in with nothing with closing costs. So back to your question, should you save for a down payment? Well, you don't have to. With the appreciation of homes, getting in sooner rather than later, regardless of the interest rate, is probably the way to go.
Right.
Plus, you don't have to worry about the landlord raising the rent.
Or wanting to sell.
Yeah.
I have a lot of people like,
Yep.
what do we do?
Yeah.
They want to sell. It's a great time to sell, so landlords are taking
Yep.
advantage of that now, and now they can do the evictions.
And
And
rents have increased nationally by over
Yeah.
12%.
So is the refinance market done, or is there still people jumping in?
It is certainly curtailed, certainly. I mean, a lot of people refinance just to get a lower rate. Well, if you've refinanced the last 3 years, there really isn't a lower rate right now. But people are always wanting cash out,
Oh, interesting.
always wanting cash out. So even though it's been curtailed for people that are doing rate term refinances, people want to take cash out maybe to buy an investment property, maybe to invest in something. So we're seeing a lot of that.
okay. Well, yeah, with all the equity in their homes now too, right? So it's kind of take advantage, and I mean,
Is there a percentage that is allowed to take out?
Generally speaking, you can borrow up to 80% of the value of your home. So let's say you have a house that's worth $500,000. 80% of that is $400,000. If you owe $300,000, then you can get $100,000 out less closing costs.
wow, okay. So that can still come in handy for some people, and to do what you had just mentioned, either buy another property or do some maybe home improvements, or whatever.
Now, that's a good question too about a home improvement. So would it be better to refinance, or would it be better to just get an equity line? If you're going to do like $50,000, $60,000 worth of work, which way would you recommend?
Depends on the individual circumstance, what the current rate is, what's the difference between a HELOC rate and the monthly payment, and whether or not they'd be better to go off into a refinance. Most HELOCs end up being paid off by a refinance of the entire mortgage later. So my normal advice to most people is just do a refinance. You're going to save yourself a whole lot of money and a headache down the road. But of course, if you want to do a HELOC and refinance later, I'm happy to do that too.
Yeah.
And just for clarification, a HELOC is a home equity line of credit.
Thanks
Thank you,
for
Patrick.
that. Thanks. And it's always nice to know ahead
Yeah.
of time what's expected of a buyer on your end. Can you kind of go over that with our viewers as well? When they call you and they say, we want to buy a house.
And you say, great. Do you have good credit? How's your credit? How much can you afford? In other words, what kind of income do you have? And if they're buying a house, do you have a down payment? And if you don't have a down payment, do you have a plan? And if not, then we can explore the avenues like down payment assistance program. But for most people who are going to buy a home, they know that they need to have some money down.
Oh, sure.
Right. Or gift money coming that they can rely on.
So most people will have a plan, and if they don't, we can go over their options.
Okay, perfect.
Yeah, and I'm just to add on to what he said there. If having that plan is really important, what would help your lenders obviously is go to an experienced lender that a good realtor would recommend, but experienced lender. If you're self-employed, that's important because they are not as easy to qualify. We need documentation, tax returns for a couple years, profit and loss, bank statements, that sort of thing. So come prepared or be ready prepared, but listen to your realtor on who they recommend as an experienced lender who can do a good pre-qualification.
Now, do you
Yeah.
pretty much do everything, do you start people off online? Or do you still do the in-person thing with all this?
It's really.
Does it, whatever?
Which it brings
Preference?
up, I wanted to ask you now,
Yeah.
are you seeing a shift in the market right now as far as like how busy you guys are, and appraisers and all of that? Are we getting things done at a little bit more timely fashion now?
It's a big difference, actually,
Yeah.
yes. We at a point when it was so busy 4 months ago, finding an appraiser was very difficult. We're not having any issues at all right now, because it has slowed down, obviously, with inflation and higher rates, and it's January still.
Right,
You
I
know,
mean, it's like
just-
all the factors kind of,
Exactly.
yeah, together, taking effect.
Fact, but I actually kind of like it because it's like the appraiser, gets
I
out there
know.
right away, and everything is just done, and you don't have to stress on the timelines, and so it's kind of nice, a little break from just that.
The other thing we are seeing are more bank statement loans. So people who show no income, who are self-employed, we are doing a lot more of those types of loans.
Interesting.
So seeing that.
Yeah, those are non-Fannie Mae, Freddie Mac loans, and it's another alternative to being able to qualify to buy a home. Self-employed people, it's important. And the reason for that is, with self-employed people, is when we qualify them on a Fannie Mae, Freddie Mac loan, we pretty much take your bottom line net, what the income shows what you're gonna pay payable to the IRS. You might make $100,000, but you might show 30 at the end. Unfortunately, that's not gonna qualify you for a Fannie Mae, Freddie Mac loan. So the bank statement loan it allows us to ignore those tax returns and just take their deposits and take an expense ratio, and now they can qualify them for that. Now, those loans require a little bit more of a down payment, okay? And they're probably gonna have a little higher interest rate, or they may not have a 30-year fixed. But it's a godsend for people who are making plenty of money, putting a decent down payment, have good credit, but are just not showing it on their tax returns.
Oh, interesting.
So like when you say it might require a little bit more down payment, are we looking at like 10% or
25?
20?
Yeah, usually, I think we have them as low as 10%.
Okay.
But you're not gonna get a 3% or a 5% down.
Yeah, gotcha.
No, that's
All right,
good.
well-
That's good to know, yeah.
More money down you put, the better the rate. And the other thing that we also have now are the 10% down on jumbo loans. So people can buy a house for 1.5 million with $150,000 down and not pay mortgage insurance.
I was gonna say, really? No
Wow.
mortgage insurance for that? Whoa.
That's
I
amazing.
want to go get a house.
So they explain what mortgage insurance is. If you put less than 20% down on a Fannie Mae or an FHA, well, actually FHA is a little bit different. The lenders have an extra cost called mortgage insurance. It's a risk. You're putting less of a down payment, so it's a riskier loan. So you'll have to pay that mortgage insurance premium until you do have the 20%, or in some cases 22% there, which you can either refinance, or eventually it will drop off. But that's what mortgage insurance is.
Okay, that's good to know. Are there other tips that you could tell the buyers that would make the whole process a little easier and smoother?
As we were talking about earlier, if they're doing things, if we're doing things online, we can do a lot of virtual verifications now for people who have W-2. So if they give us their bank account information, we can go and get it ourselves.
Oh, wow.
And it makes it a little easier, and we don't necessarily have to bring in pay stubs or bank statements for people who are not self-employed. If you are self-employed, be prepared to bring your tax returns in.
Okay. All right.
Anything else that you'd like to add that we didn't ask or cover?
No, I'm good.
All right.
Just make sure you call your realtor and get
Right
pre-qualified.
And again, Patrick and Nathan, Patrick and Nathan, what are your numbers and how can people reach you?
I'm at 805-878-1007.
And I'm Patrick. I'm the better looking one. 805-588-2767 is my cell number.
And they're with Loan Depot. And my name is April Hugh, and I'm with Century 21 Hometown Realty, and my number is 805-878-5056.
And I'm Miko Neiman with eXp Realty, 805-714-8124. And thanks for watching.
Yeah, we'll see you soon. Thanks,
Bye.
you guys.
Thank you.
Thank you. Bye.
To see more information, go ahead and click on that button, and you can reach me at 805-714-8124.
And my number is 805-878-5056.
Thanks for watching.
Yeah, we'll see you soon.
Bye.